What's up, YouTube? It's Todd Horst here with Taste Tracker, and I have a small account challenge update here for the 2023 account. Put positions on today after taking a break on Monday and Tuesday, I think. Um, with the small amount of the dollar figure on this account, I have to be very choosy with my positions as far as how much collateral they need. And so I wrote these 2 pages. Well, first of all, I had this chart over here, which you would put in the delta and the credit for the strike close to around a 20 delta, and then the collateral it required and how much the cost per share was. And then it generated this figure over here, which is how efficient your money's working for the credit you receive versus the collateral you would need. So this was all manual. I obviously wanted to automate that. So I have this one over here, short ideas, tastetrack.com/test/short ideas. This one is using Yahoo as a source, which is a free data source, so their data's okay. The problem with them is they don't have delta, so I had to calculate that myself. And so that can be accurate, but a lot of times it's not. So then I wanted to do something better than that. So version 2 here uses TD Ameritrade, which does ship the delta. So that's good. And then the margin value, I'm using the Tastyworks formula, but they're all fairly similar. This is exactly what Tastyworks uses, except for the fact that if the ticker is deemed to be riskier, they will, instead of requiring 20% in one of the formulas, there's 3 different formulas, they will require more than 20%. And they don't tell you that up front. You have to contact their support. You can, of course, tell when you go to uh, fill out the position if it's more than what this margin capital requirement column is, then that means it has elevated requirements. Well, they don't have an API for that. TD Ameritrade doesn't, and um, Tastyworks doesn't. Neither of them have an API that I can call to send in the strike and they will return the buying power effect. They don't have that either. So this page is only as good as the environment that we're in. When when the tickers are higher priced, it's going to be more accurate. So let's sort this by price here, reverse. These higher dollar ones, like MA, MasterCard, Lockheed Martin, Costco, Chipotle, all of these I would probably expect to be fairly accurate with the margin calculations. But when you get to these lower dollar one, they're much more volatile and more inclined to require more than the 20%. So my point here is I had a good idea, and right now it's okay. You're welcome to use it. It's not as good as I want it to be in order to make really educated decisions on. So anyway, yeah, you can sort by symbol, by price, by IRA value. And so this is obviously easier to calculate because in an IRA, there's no margin, so you just have the strike, the 7, minus the 80 cents, or I calculate the mid, so in between the bid and ask. So 7 minus that, and that's 717. I'm sorry, 613 is the capital requirement there in the IRA. So if you really want to, you can sort by IRA value and sort of get a list of some of the best ones without taking margin into account. Or you can try this and give it a go and just sort of go down the list and, fill it out in your broker. And if it's requiring more than the margin stated, then that's going to affect this number and probably will not make it be as relevant. But let's walk through how to use this. Let's say um, Carvana, which is one of the positions we got in today. It's currently trading at around $11. The expiration closest to 45 days is December 30th. The expiration or the strike closest to a 20 delta is a $7. So if I come over here and then go to 45 days, that would be December 30th, like it said. And then the 7th strike, come here. Right now it's at a 26 delta. So even though this is coming from TD Ameritrade and they are setting the delta, obviously things change. So if as the stock moves down, that may or may not be relevant. And you can see the value here, the premium collected would be more than what it was stating. Yeah, and so then you would, come over here, see if the buying power reduction would be worth it to you. Okay, so because I'm not super satisfied with this page yet, I just did the classic, come over here, sort by, sorry, there we go, sort by price, and then kind of come down to each ticker to see what I thought looked okay as far as the chart is concerned, using the least dollar amount. Then I came over here and saw how much collateral that would need. So anyway, going through that list, Carvana, Plug, and Peloton. Peloton. So let's just jump to those. Now, Carvana, had bad earnings, got downgraded to I think like a 50 cents. One of the analysts. I don't really care what analysts think. This is on a pretty aggressive downtrend and it's sticking to that. So that's concerning. On the flip side, we were in this channel here and it acted as decent support for basically since May. And then we dropped down into this lower channel. So odds are pretty likely that it chops around in this channel, potentially even comes back up. We'll see. Obviously, you never know. So this one is closer to the bottom end of its range, potentially, assuming it doesn't go down further. And now Pton, I liked that it was a down day. That means I can collect more premium, but for the most part, it's been on an uptrend. We're also sitting here at support. We can see back here where it touched all of these lines. So that's comforting. And then we kind of have a low here of 835 that would be pretty good support. And then the next low would be around 7. So the strike we have over there is 9. That puts us right here at the SMA. So the thought process being is, yeah, we could come down here. Maybe that the 50-day, no, that's the 100-day SMA is enough to hold it. If not, it might come down here to the 50-day, and that might hold it. If it stays up here for too much longer, we'll see the SMA start curling up, and then those will be better support. It is kind of up here high in RSI, and this is not a bad thing when it's on fire. That's generally a good thing, and MACD is above the 0 line there, so it's as good as any. Plug was the last one. Okay, and all of these are post earnings, so we don't have that ahead of us. And again, kind of looks like the low here would be around 14. So that is what I sold. So yeah, it could definitely come down here. There is a potential that we find support in this area, somewhere around $16. Plug is one of these tickers that can have huge moves up and huge moves down. So even if this does come down and comes back down to the range that it's been in since May, I wouldn't be concerned even if it went below that, just because we can have these huge rips. If we zoom out here, it's a pretty volatile stock, and you'll get these huge rips where you can very easily close. So if it doesn't get it on this expiration, we might have to roll it once, but then it should come through. So I would say all of these positions are pretty okay. I wouldn't say any of them are my favorite, but just looking at SPY, we're at a little bit of a tricky spot. I do think this is a bear market rally that we reject off of here and come down, but I can definitely be wrong. So we could break through that line and then come up here, to 420, 430, somewhere in these ranges before it goes down, or it could just continue going up. You never know these things. Anybody trying to predict this stuff knows they're wrong half the time. So, um, we could continue to wait and see how this plays out. But I think that the tickers and the strikes that I chose are safe enough that we don't have anything to worry about, especially with rolling them out as needed, which definitely very familiar with doing that. I am definitely excited to start getting up into these higher tickers. Once we start getting, um, above, well, at least the $50 range, we start getting into some better companies where, in one sense, these lower priced tickers have more premium for you to collect because they're more volatile sometimes. But a lot of times they can just churn there and not make any progress. And so if you're too aggressive on your strike, it will they'll always be teetering on both sides of it. I'm in a couple positions like that right now, um, where they refuse to expire worthless because um, they keep dancing on both sides of it. It goes in and out of the money. From that perspective, you can sometimes collect more premium, but a lot of times you just end up waiting and waiting and waiting. With these higher ones, they're less likely to have a less likely. I mean, it's 2022 and they're all down by a large amount, but um, they're better companies. And so while I would not be taking assignment on this account, generally speaking, on a larger account, if you were to get assigned, it's not the end of the world because you can hold it out, and once the economy starts to recover, then you have good tickers. But anyway, okay, so obviously entered them in the Tasty Tracker, which pushes it over to Twitter. Nothing over there, surprise-wise. Right now, they're all down a couple bucks, especially for being put on today. No big deal there. We're sitting right at 1100, which is great. Half our buying power. Originally, I was just going to do two positions, Carvana and Pton, but then Plug just needed such little buying power. I think it was like 177. That's a little bit ridiculous. I couldn't pass that up. So these were both like closer to 250, and then this one was one something. So anyway, so that's why I did three. I said before that I would probably wait um, couple more positions before that happens, but here we are. Okay, so I'm not sure if you want me to go over all the old positions that we closed. It's probably easier to see over here. Okay, so we closed out of Kohl's and Shop for $50 profit, closed out of Run for 23, closed out of FCX for 38, and that brings us to the very beginning of the challenge. So for only being a month in here, started on 11/2. So actually, yeah, we're 14 days, 2 weeks into it to already be up $100. I think is pretty good. So we'll see if that can keep going. Right, that's about all I had today. If you have any questions, let me know. Thanks.